let's get into it, man. Oh, I ain't even got my slides open. While I open up my slides, we're gonna be talking about some questions that we had got on Instagram that came through. Y'all make sure y'all share this out with the cousins who y'all feel like may benefit from this right here. I appreciate y'all for pulling up. Wrong one. Opened the wrong slides. And then, as always, if y'all want to download the slides, click on the link in the description, and you can download the slides out of the Google Drive. You know what I'm saying? You can download the slides out of the Google Drive. Or if you go to my IG profile, you go to my IG profile, you can download it's a Linktree link. There's a Linktree link in my IG profile. If I turn the screen on, that'll help. It's a Linktree link in the IG profile, so y'all can do it there. Let me swap this screen and we'll get into it. Boom. Swap the presentation. Put this over here. I got a lot going on. As you can see, the Omicron did not keep me from coming in. I'm a little slow today, but it ain't stopped the show. It ain't stopped the show. All right, man. Without further delay, let's get to it. Let's get to it. Is everything going? Am I good? Yes, y'all can hear me. I got the ones in the chat. Everything sounding good. We 4 minutes in, and I still ain't. Boom. Y'all ready? Y'all ready? Y'all ready? Y'all see what time it is? Q&A poll, IG polls, part 6. This part 6 from answering the polls on IG. J Miles, what's happening, Jay? Did I get it right that time? Did I get it right that time, J Miles? Okay. Somebody got me on real loud out there. I'm like, I hear myself echoing. Where we at? Okay, y'all, let's get into it, man. Before we get started, y'all know what we gotta do. We gotta get into the disclaimer. Oh, do I need a thumb? Oh yeah, let me get a thumbnail. I can just use. Let me get my thumbnail together. Boom, thumbnail. Oh no, actually, yeah, thumbnail time. Cheeseburger. All right, then. Before we get started, y'all know what I gotta do. Disclaimer. I really ain't gotta blow the disclaimer up no more on YouTube because it's big. Y'all say it with me now. I'm not a financial advisor. I'm not a fiduciary. Nothing I say should be taken as financial advice. Do your own research. That's why we do these Tim's Tidbits, so you can learn how to do your own research. Investing involves considerable risk, and you should always consult a financial advisor before making any investment decisions. You feel me? Now that that's out the way, y'all know I got to shout out my family, man. First up the bat, as always, my little sister Kiki Williams, aka Stock Queenie, on Instagram, Twitter, everything. Stock Queenie. Got amazing groups, Stocks to Freedom, the Come Up series. You know what I'm saying? Everybody know Mark and Jolene, but I really want y'all to get on to the Supplemental Sundays with TiVo and AJ. You know what I'm saying? Shout out TiVo and shout out AJ, the investor plug. If you look on my IG page, the investor plug that I follow, that's the real one, because they trying to make some fake ones on AJ. And everybody know TiVo. Shout out to the Bond Bullets, the world famous Bond Bullets, Jason Sweetie, also known as Jada Trade on Instagram. If you want to learn how to trade futures, that's an amazing resource. Shout out to cousin Zay, Stock Zay. Shout out to the Runners. If you want to be a part of an amazing community, the Runners is a great group. Holla at the cousin Stock Z. Learn with Lex. Shout out to the cousin Lex. Amazing fundamentals trader, swing trade phenom, futures phenom. Lex be killing them on the futures now. Big Draco, prolific prophecy official, finance on fleek, all that what Draco do. Everybody know Charles Coney, the whole community call him Uncle Charles. Book you a one-on-one with this man and he'll get your financial life in order as far as future investment and financial planning. Trading with a dummy. Shout out to cousin Mark. Trading with a Dummy on YouTube. It's an amazing show that he got put together. He interview people, he review groups, he break down trading and investing in real time. Yeah, man, he a great dude. The cousin Tag, him and his homeboy, I don't remember his name, but they got official brand resumes. Brand resumes, they help you put together an amazing resume. And then this last gentleman, I oopsed up on his page one day and came to find out he a good dude. They called him the Professor. Day Trade Professor on Instagram. He got, you know what I'm saying, free stuff out there for you as far as learning how to be a day trader. So holla at him, daytradeprofessor.com, man. Let's get to it, man. What we talking about today? What are we talking about today? We talk about questions that the cousins sent in. I always tear this one up right here. I tore it up before. I ain't even gonna try to see it. Y'all see the name. You know what I'm saying? I tore it up before. You say war may be coming. Do you think it's priced in from the correction? Right? This is what I think. Right? I don't think nothing, right? Priced in the market. When people say priced in the market, I don't believe in events being priced in per se. This is just my own opinion. You know what I'm saying? My own opinion is we are trading against computers, right? We are trading with computers. Big boys don't look at the charts like we look at the charts and trade off of this and trade off of that. They use algorithms to do their trading. So the algorithm, you know what I'm saying, got to have specific stuff put in. You know what I'm saying? They got to have stuff like, what time am I going to start trading? You know what I'm saying? What price am I looking for? What words am I listening to from the news? All this stuff, the algorithms, you know, they get programmed in. So it's like, that's why I don't believe in like priced in. Because the only thing I know is the market likes certainty. When there's an unknown variable out there, the market trades really funny. And then if it's an unknown variable that jumps up and surprises you, the algorithms go crazy. You know what I'm saying? Like unexpected news and unexpected bad or good earnings drive the algorithms crazy. For example, just say like, who was that? Just Facebook just reported an unexpectedly bad earnings, and the algorithms went crazy. I'm talking about Facebook sold off like 25% instantly. It like Facebook lost a whole lot of money in one day. Why? Because when the computers saw them bad what's names in the aftermarket, man, Facebook dropped so far. And you know it was the computers doing it, because how many retail traders trade in the aftermarket to move Facebook by that amount of money? You see what I'm saying? The market just loves certainty. Uncertainty like drives the algorithm crazy, right? And so and every day, at all times of the day, all times throughout the ups and the downs, the market ain't doing nothing but moving from the premium market down to the discount market. It's just trying to, you know what I'm saying? It's hunting liquidity. That's all the market doing. So that's why I don't believe in stuff being priced in. I just believe that the market likes certainty. And when stuff is like say war coming, if we know that war is coming, like the word war or conflict is not going to shock the algorithms, so it's not going to drop or skyrocket. Just like everybody was waiting for the taper to happen, right? We didn't know if the taper was happening, so the Fed kept avoiding the word taper to stop the market from dropping. You see, if they would have said taper, the market would have dropped, because, you know what I'm saying, it was uncertain about taper. So soon as they hear that trigger word, it's gonna make it drop. But long as they don't hit them triggers, we won't be getting all that dropping. That's why I don't believe in priced in. That's just my opinion. I may be wrong, but that's how I feel about it, and it make me sleep good at night. You feel me? All right. Mr. Leon Lewis, he submitted quite a few of them. So I, you know what I'm saying, I gave him a break, and he got one here that say, what info is needed to build a trading plan, how to determine and set risk management, and then he got another one over here where it say, went too far. Educational resource needed before one starts trading. So he got 3 different ones in here. 3 different ones in here. So here we go. Starting from the top. Trading plan, right? First thing you need to do, and not just for Mr. Leon, for anybody that's new to it, first thing you need to do, you need to know your trader identity, right? Know your trader identity. What type of trade? Are you a trader, first of all, or are you an investor? You know what I'm saying? Tim, what's the difference? An investor is somebody that buys their shares and hold them forever, or hold them for, you know what I'm saying, as long as, you know what I'm saying, they want to. A trader is somebody that buys a position for a short amount of time and then sells it later for a profit. The trader is not looking to hold it for a long term. They just buying and selling, buying and selling, buying and selling on a constant basis. What's your trade identity? Are you a day trader? Are you a swing trader? You know what I'm saying? What kind of trader or investor are you, right? Know your strengths and weaknesses. What that mean? You got to understand, you got to learn self-mastery, right? You got to learn self-mastery. You got to understand what you good at, understand what you bad at, understand like what affects you, understand what sets you off, what makes you click, you know what I'm saying? And you need to know your why. Why am I doing this? If you're doing it just because you want to make money, say that. My why is, we went over my why before. My family. I want to spend more time with my family. I want to be there for my wife. I want to be there with my kids without having to ask a boss or a supervisor if I can get time off to do so. That's my why. What's your why? Know your why, because when it starts getting hard, your why is what's going to keep you going. Your why is what's going to keep you motivated, right? No one else can determine your risk management. You know what I'm saying? Because it said, where did he say over here? How to determine and set risk management. No one can determine that for you. No one can, there's no one blanket statement of, 2% is a good risk management. 1% is a good risk management. $20 is a good risk management. $100. Everybody risk management is different. Risk tolerance is different. So only you can decide that. Only you know how much money you willing to risk to make you. I may be willing to risk $10 to make 200, but you're only willing to risk $1 to make 200. Our risk tolerance just different. You know what I'm saying? This person over here may be willing to risk $1,000 to make 5,000, but you only willing to risk 100 to make 5,000. Those are 2 totally different risk to rewards, but nobody can tell you what your risk management should be. You have to develop that yourself. That's an individual thing, right? And one of the most important things about trading or investing is knowing your exit before you even get into the position. This is the one where everybody get it wrong. I got it wrong in the beginning when I first started, and people inbox me right now to this day asking me, Tim, when should I get out of this position? You're supposed to know that before you even press buy. Before you even buy the position, you're supposed to know when you're going to get out to the downside and when you're going to get out to the upside. You're supposed to know that before you even get into it. And how do you know that? That comes into effect with your trading plan, right? Your trade, Tim, what's a trading plan? Real simple. I keep it real simple. A trading plan is a systematic method for identifying, let me read what I got here. Trading plan is a systematic method for identifying and trading securities. It's just a plan. It's a basic plan of your entry, your exit rules, your risk management, and your position size rules. That's at the basic form what you need for your trading plan. You need to know when you're gonna enter. That's your entry. It need to know when you're going to get out. That's your exit. Then your enter and exit rules, your risk management rules. How much are you willing to risk on every trade? And your position size rules. How much are you going to risk against your overall portfolio, right? Meaning you don't want to over leverage and like you don't want to put all your eggs in the tech basket, and then you ain't got nothing going on nowhere else, and you done put all your money into tech. So tech start crashing, so your whole portfolio burning. You over leveraging in tech. You know what I'm saying? If you only got like 10% of your capital in tech and the rest is cash, and you ain't got no other positions, right? It ain't nothing wrong with having all your money only in tech, but don't put all of your money only in tech, if you understand what I'm saying. Like, if you're taking a small portion of your money and putting it into tech and leaving the rest in cash, that's cool. You may not want to play nothing else, but don't put every bit of your money in tech. You know what I'm saying? Don't ever do that. Don't put every bit of your money in one basket. Don't do that. That's not good risk management, right? I said that about knowing you, knowing yourself, self-mastery. I kind of said that. Oh, some books. Read books on your mindset, right? This all still tied into Mr. Leon stuff. Read books on your mindset, right? And these are like some go-to books I recommend, right? If you're taking notes, write it down, right? The Mental Game of Trading, right? That's my favorite by far. Trading in the Zone, right? And What Would the Rockefellers Do? The Mental Game of Trading and Trading in the Zone, that's all about the mindset of trading. And What Would the Rockefellers Do? That's about the mindset after you get the money. That's teach you what to do with money once you get it, right? And then educational type stuff. Learn how to research companies and learn how to read the charts, right? If you want to learn how to research companies, you can go to like their investor relations page. If you go to Google and type in any company name, say Apple, and then put investor relations, it'll show you the investor relations page. If you put in Tesla investor relations, it'll take you to their investor relations page. That's where you can read up everything you want to know about the company, what they doing, their financial statements, all of that. You can go to stuff like CBNC or Yahoo Finance to look up their financial stuff. But the investor relations page, I say start there because that's the company themselves. You're going to learn everything you need to know about that company on the investor relations page. You can go to things like Seeking Alpha. That's a website. You can go to Market Watch. It's a lot of good business information out there about companies on those pages right there. Those just a few of them that I throw out there. If you're taking notes, investor relations page, Yahoo Finance, CNBC. And if you do not know how to figure out like what sector companies are in, go to finviz.com. And matter of fact, let me show you that while I'm talking about it. Oh, and one last thing before that, I did an IG live on 11/28. If you go to my Instagram page to my IG videos on 11/28, it was one called Demystifying Charts, and I went over some stuff about reading charts on there. And then the homie Zay, he got courses on reading charts. If you want to learn about charts and stuff like that, Zay one of the best in the business at it, and he got a whole course on it. And I did an IG live talking about it too. And then it's a million things on YouTube to teach how to read charts. So let me see what we got next here. All right, fair value gap. Before we get to the fair value gap, for anybody who don't know, let me show you what Finviz.com look like. All right, so if you go to finviz.com, finviz.com, right? And then if you come over here to where it says maps up here on the toolbar, you got home, news, screeners, and maps. If you go to maps, this shows you all the tickers, right? Get out of here, ad. Can I get out of this ad? There you go. This shows you all the tickers right over here. I got the S&P 500 selected. If you look at the top left over here, the S&P 500 is selected, and it shows you all the tickers for the different companies that fall in the S&P. And if you want to look at each, and this gives you the ticker symbol of how to look up different companies on Yahoo Finance and stuff like that, because you're going to need their ticker symbols if you're going to CBNC or Yahoo Finance. And if you want to look at ETFs over here where it says exchange traded funds, there you go. You got all the different exchange traded funds. I like to trade the Spider exchange traded funds. So you can go to sectorspider.com. Let me see what it's called. Yeah, sectorspider.com right there. Sector and the Spider SPDR. Sectorspdr.com. And this shows you like all the different the Spider ETFs for all the 11 sectors. That's the spot ETFs. But yeah, those are the ones I like to look at. Those some of the resources I like to look at. Boom. Coming from what it is, Wally Dogs. Is that Wally Dogs or Wall Eye Dogs? I'm gonna say Wally Dogs. Okay, Wally Dogs. It says, are fair value gaps always filled? It seems that in the monthly, it's not always filled, right? For anybody who don't know what a fair value gap is, first of all, a fair value gap is a term that I learned from ICT, and I typically just say gap, but ICT terms it as a fair value gap, right? And just to show what it is, it's just a regular 3-bar gap, 3-candle gap, where you got candle 1, 2, and 3. It's a 3-candle pattern where candle 1, and come down, you got candle 1, 2, and 3. It's a 3-candle pattern where candle 1 and candle 3 don't share price. It's a skip. See, the low of candle 1 and the high of candle 3 here don't share price, right? And over here on this side, the same thing. Candle 1, 2, and 3. You know what I'm saying? The low and the high don't share price, right? These are the gaps that ICT call fair value gaps, right? And it's there's no guarantee in anything. I don't like using the word always when it comes to anything dealing with the stock market, right? Always just don't exist when it comes with anything dealing with the stock market in my mind, because I'd rather say high probability, right? If it's a fair value gap, there's a high probability that that gap will get filled, because what happens in a gap, right? The gap is an area where either buyers or sellers got skipped, right? They didn't get an opportunity to partake in the transaction. You know what I'm saying? They standing in line at Kroger's, right? And then all of a sudden they got skipped, and they went to the person behind them, and they was there willing and, you know what I'm saying, ready and willing to spend their money, and they got skipped. So now the algorithms are coming back to pick them up, you know what I'm saying, on this side. And that's why I say it's a high probability of them getting filled, because they're just, you know what I'm saying, filling not voids, but like I can't think of the word I'm looking for right now. It's not discrepancies. It's man, what's the word I'm looking for? What do I got my Ninja Trade open? Imbalance. That's the word I'm looking for. It's like an imbalance. So the market trying to balance itself out the right way, right? And I already said what type of gaps they are. It's a three candle pattern where candle 1 and 3 don't share a price, right? Candle 1, 3. So it's just a high probability that they will get filled. Like most people, a lot of people say gaps always get filled. All gaps always get filled. Most of the time, it's highly probable that them gaps will get filled. It may take a long time for it to come back and fill those gaps, but a lot of times those gaps do get filled. And why do they end up getting filled? Because the algorithms are going back to fix that imbalance. They're going back to service those people that got skipped. So sometimes it may happen quick. Sometimes it may take a long time. Sometimes it may never happen. A lot of times, when you see the market just run, a lot of times it never come back down and fill those little gaps that was left. You know what I'm saying? And then just like in January, from January 4th up until the latest, you know what I'm saying, bounce, it's like we had went back and filled gaps that was made way back in like June and July. You know what I'm saying? So it's like it took a long time for us to go back and fill those gaps. It was like we was filling gaps from like way back. Let me see if I got let me pull up my trading view real quick and see if I can see like a throwback gap that we filled from way back. Let me switch my screen over here. Desktop, boom. Trading view. See, when we did this pullback right here, shrink this up. So I'll see if I can see, blow this up, should I say. When we ran here. We made a gap here in October. That was a big gap up in October. See, these are full gaps. This is not the 3-bar gap that I was talking about Like if you look at these gaps here, these are full gaps. And what you mean by that? Like this day we closed here, and then the very next day we opened up way here. That's a full gap. Like we just gapped up. That's 1, 2. That was 2 full gaps. There go another. That's a full gap right there that never got filled. Let's come back and see if it's anything up under this. Right here's a 3-bar gap right here that never got filled, and this was in. Get out of my way, ad. This is a 3-bar gap, a daily 3-bar gap right here that was made in June, right? And then here go a full gap that was made in May. Did we get that low? Let me see how low we got. I'm gonna put a line at how low we got. Boom, that's what we went to. Okay, so we came back. We filled this 3-bar gap right here that was made from June. This 3-bar gap didn't get filled. So we came all the way back and filled the 3-bar gap from there, right? So that never got filled. And then so coming over here, this gap here that had never gotten filled, it got filled during this pullback, right? That gap got filled. That gap got filled. That gap got filled. And all of those took months and months and months before they came and got filled. And now let's look at why they end up getting filled, right? So now this is what I'll be talking about when I say the market be hunting liquidity, right? When I say the market be hunting liquidity. So here we go. We got, let me see if I can get something to draw on here. What's the little, no, not that. Where's my little, I don't want that. Oh, I'm thinking about what's the name? Let me find something where I can. What is this? That ain't what I wanted to do. Okay, let's use a rectangle. So boom, right here, when we ran up and made these highs on July 4th, right? We came above this area right here. So all in this area right here, right above this, above these 2 highs right here, guess what was sitting up there? Liquidity. Why? Because we came up, made an all-time high. We came down, came back, tested that all-time high, then dropped back down. So guess what? Everybody had their stops set right up here. Everybody had their sell stops set right up there. They cause they would, if you selling it, buy stops, I'm sorry. If you selling it down, they got your buy stops sitting right up here. So we ran up into those buy stops, right? Sucked up that liquidity, right? Came down, tested it again, and then dropped off. Once we got enough liquidity from this area up here, right? We done sucked up enough buy stops up there. So now, where we going? We going to the place to give us the opposite. We going to a place to give us the opposite. Now we look for somewhere where below here to give us some sell stops. So that's what we did. We went up, we ran all these buy stops above here, then we came down and we ran these sell stops below here. And then we started going back up again. You see? So that's all the market be doing. That's all the market be doing. Be going, and then remember when I said it's always looking for a place of going from premium to discount, right? It's always looking for a place to go from premium to discount, right? So from here down to here, right? This is the line right here where it switches over from premium to discount. Up here, it was trading in the premium market, came down into the discount market, sucked up liquidity, coming back up, moved back up into the premium market, came back down again. Now it's probably, hopefully it just kind of goes sideways, because I really don't want it to come all the way back down here. But this the thing, you got to be careful where we at right now. If we come back down and we don't go sideways and we keep slipping down, and make a lower swing low, that means we are still in a downtrend. Because all we did, we made a lower low, a lower high, a lower low, a lower high. If we come down and make a lower low, y'all know what that means. And we still in the downtrend, right? But if we come here and make a higher high and then just start consolidating here, now we in a consolidation. But if we make a lower low, we still in the downtrend until we come back up here. And once we make higher highs, higher lows, higher highs, higher lows, higher highs, then I'll be okay. We heading back into a uptrend now. But right now, we just in, like as the cousin Zay say, we in no man's land right now. We waiting for some confirmation. We waiting for some confirmation. What's my? I think I got one more slide. Do I got one more slide? Let me see. Talked about the gaps. Okay, one last slide for the day. Then I go to questions. Right? Came from Dr. Bell Senior. Should we? I'm thinking that's supposed to be stock up on Google. Should we stock up on Google? I don't know. I can't tell you. What does your trading? What does your investing plan says? What does your investing plan say? I can't tell you if the stock up on Google. I can just tell you what I know about Google. What do I know about Google? I know that Google is a $1.8 trillion tech company that they got slated in the communication service sector for some reason. I don't know why they slated in the communication services. As far as I know, Google is a tech company, but it's in communication services, right? Maybe because of all the services they got. They got AWS. They got, all of this stuff. They got web services and they got internet browsers and all that stuff. I don't know. Maybe that's why. But they're a $1.8 trillion company, right? They trade with a beta of 1.07. For anybody who don't know what a beta is like how volatile a stock trades compared to the overall market. Anything below a 1 is low beta, meaning it's less volatile than the market. Anything at 1, it trades right along with the market, and anything above 1, it trades more volatile than the market. And the higher above 1 it goes, the more volatile the swing is compared to the market, right? And then it closed 6%. It's close to 6% off of all-time highs, which it made those all-time highs on February 2nd, right? And this year, it just made them all-time highs on February 2nd because they made a good earnings. Like I said, the market likes certainty. Right? And if something strange happened, if something strange to the good side happened, the market goes crazy. Boom! The algo shot Google up. You know what I'm saying? They announced the stock split. Boom! That was something shocking. It shot Google up. Google jumped up. I think Google gapped up. What was it? I can't remember how much it gapped up. It gapped up high, probably about 10%, I think. It gapped up high after earnings, right? Because they beat almost 11% on earnings and they beat over 4% on revenue. And then they announced a 20-to-1 stock split. And what does a 20-to-1 stock split mean for anybody that don't know? That means that if Google, let's say Google is $3,000 per share. Once they do their stock split, then 3,000 divided by 20, what's that, like 150? What's that, 150? I don't know. Let's get the calculator. 3 divided by 20. 150. So if Google is $3,000 when they do the stock split, now their shares are going to be $150 a share. That means more people can actually afford to buy a whole share of Google. That it ain't gonna make Google more or less valuable. It just means that more people can invest in the company now. You know what I'm saying? More people can buy full shares of the company now. So that makes it more appealing to retail traders like myself. Because everybody can't afford to buy $3,000 a share. You see what I'm saying? Like if you want to get a full share of a good company and it costs $3,000, that's a little discouraging for people, retail people. But $150, not discouraging. You see what I'm saying? And that's if Google was at 3,000. So, and if you got, and playing options on it, it's the same way. Just like the share split, the options contracts, they balance it out to make it, because it's per 100. So, you know what I'm saying? It's per 100. So it'll multiply out your options. It'll make them whole or whatever they call it. You don't have to change nothing if you're already in that position when the split happens. You know what I'm saying? But if you buy it afterwards, you're going to see it's going to be done at the afterwards price. But if you already in it, the computers just do it all for you. You know what I'm saying? When you go in, it knows what to do with your option position. You ain't got to do nothing. Because just like when Apple and Tesla split, you ain't have to do nothing. The computers did all that with your options contract for you. You feel me? So that's what I know about Google. You know what I'm saying? And now that I've told you what I know about Google, hopefully that will give you shed some kind of light on if you should stock up on Google. You know what I'm saying? Do you feel that Google is like, and according to Yahoo Finance, let me show you what Yahoo Finance say about Google, right? Do you think Google is overvalued or undervalued at $1.8 trillion? Let's see what Yahoo Finance says about it. Yahoo Finance. Let's see what Yahoo Finance says about Google, right? Go to Yahoo Finance. Boom. Yahoo Finance. Let's look up Google, right? Look up Google. Google. See, $1.8 trillion right over here. They're a $1.8 trillion company. That's what market cap means. They trading at a beta of 1.07. See what I'm saying? Same thing I just put on my slide, just showed you. If you look at the PE ratios and all that right there, they trading at a 25, meaning they trading at 25 times earning. You know what I'm saying? They trading at 25 times earning. Earnings per share is 112.20. You know what I'm saying? So let me see. Wait a minute. Boom. 2000. See that? Y'all see that? Close enough for government work. Y'all see what I did though? I probably should have talked it out for you. Right? It's trading at 20. When you say 25 times earning, because your PE ratio trailing 12 months, that's what a TTM mean. That's the price to earnings ratio. That's what like a lot of investors, some people call them value investors, they look at this stuff to see what's the PE ratio, right? And you see that's a 25.54. That means Google is trading at 25 times their earnings. So their earnings per share is 112.20. You see what I'm saying? And it's all real time. So it may not give you the exact number at that time, but it's going to get you in the ballpark. So if you look at their PE ratio, and Google PE ratio is 25.54. And you see their earnings per share is 112.20. So you take 112.20, $112.20 times, because they say 25 times, whatever the PE ratio is, 25.54 equals $2,865, right? $2,861.80. That's what Google trading at right there. They opened at $2,868, right? And they closed at they say the previous close. I was trying to see what the close is. I'm assuming that's the latest close. So they say previous close. I'm looking for the close of the day. I don't know anyway, but you see, 2,865, that's right there with the open, 2,868, and the previous close, 2,861. So that's when you hear people say it's trading at such and such times, or 10x or 11x or 15x, 5 times. That's where they getting that from. When they say, Apple is trading at 100 times. I mean, what's one of them meme stars? AMC is trading 100 times earnings. You see what I'm saying? Like, it's like people be like, oh no, that's way overvalued, because are they really worth 100 times their earnings? You see what I'm saying? What kind of, if like Google is a very profitable company. So is Google worth 20 times their earnings? To me, yes, I think Google is worth that and more. And then Yahoo Finance says that they're undervalued. You see what I'm saying? Yahoo Finance right there, they got undervalued. And what's the 1 year target for Google on Yahoo Finance? You know what I'm saying? This is what they got a 1 year target of 34.54. You know what I'm saying? Meaning in the next 12 months, they see Google going from 28.68 to 28.60 to 34.50. You see what I'm saying? That's what they see in the next 12 months. But I'm getting off on a tangent because that was my last slide. And when I get to talking about this stuff, I don't know how to stop. Um, do y'all got any questions, man? I've been on here for 42 minutes. Y'all got it. Hey, baby, you see the questions in the chat? What you say? Oh, Spicy, I'm killing the gym game. I'm just a dude from Fort Lauderdale, Florida, Spice.
Yep. J Miles said, what about if you get a 2-year leap and the goal is 150%, but you reached 150% in 1 month? What's your opinion?
Okay, Jay Miles, he said, what about if you got a 2-year leap and your goal is 150%, but you reach 150% in 1 month? My opinion is you should be cashed out because your goal was 150%. That's just my opinion. Because you hit your goal. You hit your goal. Like, let's avoid greed at all costs. No matter what it's doing, stick with your plan. What does your plan say?
What is meant by an area of liquidity?
An area of liquidity is just a place where stops are sitting. Like in like liquidity is like money. Money. That's all liquidity is. So it's an area where stops are sitting, and if you're a technical trader, right? If you're let me pull up my thing while I show this right here. If you're a technical trader, right? Let me get all this junk off my screen. If you're a technical trader and you looking at this you're looking at this chart here, right? So you saw we went up here, and this right here was the all-time high at one point in time. These daily charts. You come down, and when you let me make this bigger so y'all can really see it good. Okay, so here we go. All right, so this right here was the all-time high at one point in time. Let me change this to the arrow. Change it to the arrow, Tim. So this candle, this red candle here was the all-time high at one point in time. Right? We came down. We made some equal lows right here. We made some relative equal lows, and then right below these equal lows, people put their stops because they see that, like, support and resistance traders, they see these equal lows right here, boom, as support, right? Then we'll put a line right up here, right? So we came up here, made all-time highs, and we came down. We made equal lows one day. So automatically, support and resistance traders thinking, okay, this is support because it tested 1-2 days. It bounced off it, right? So guess what's sitting below these equal lows right now? Our stops. We buying up, so we got sales stops because we buying up, so we putting sales stops below that right there. So sales stops are sitting right down here, right? So what happened this day? We dipped into that liquidity pool. See that wick that came into there and how it shot up off of there? See, it made that long wick that let you know, it just sucked up somebody's liquidity, how it shot up off of there. Then we took off and we came back up here around this, what they call this right here. This is resistance now because it rocketed off of there. We came up, we got close, and we couldn't break through it, so we came down. So guess what people got sitting above this area up here now, right? Now we got buy stops sitting up here, right? We got stops, we got buy stops up here, and we got profit targets up here. So guess what? We got all kind of liquidity sitting up above these previous highs right here. So it just goes up, it dip into this liquidity pool, it go up, it dip into this liquidity pool, it come back down, and then it found a bigger liquidity pool down here. Why? Because it was some more stops resting up under these equal lows down here from way back then that never got tested. See what I'm saying? So it's just going from liquidity pool to liquidity pool to liquidity pool to liquidity pool. Okay.
Next question, or this may be a comment. J Miles, I'm assuming he or she is talking about the Google split 20 to 1. The comment says, so maybe more buyers may push the price up some. So I'm assuming they're talking about the 20 to 1 split.
Oh, the 20 to 1 split?
Yeah.
The
So
yeah,
maybe
yeah,
buyers may push the price up some.
yeah. Like an influx of buyers will always push the price up, and but you got to be real careful as when you buy. Whenever a stock do a split, you got to be real careful. Like, um, take the learning lesson from when Apple and Tesla split. Apple and Tesla was like very, very, very high visible stocks, and when they split, everybody and their mama wanted to jump in when the split was announced. And so the value of these companies was just raising and raising and raising and raising and raising. And when you may end up getting left holding the bag for a little while once people start to take profit, or once people realize, is this company really worth this amount? You know what I'm saying? That's why you got to be real careful when them stock splits get announced, because people will jump in because they really want to get in, and only get in if you feel like that company is worth that amount of money, if you're buying for the long-term hold. If you don't feel like it's worth this amount of money, wait until it pulls back to the price that you feel like it's worth before jumping in.
All right, Von T made a comment. Perhaps Google thought that it would be better to split because they don't have a strong forecast.
I don't know why they felt like it was better to split. Word on the street is Google splitting because they want to try to get into the Dow. And Dow is price weighted, and so you don't the Dow not gonna let a $3,000 stock into the Dow because they price weighted, and if Google have a bad day, that's gonna suck down the whole Dow. But Google at $150 would be a good fit in the Dow. And you know, if people, for those that don't know, the Dow is like the blue chip. That's the American dream stocks. You know what I'm saying? Them the blue chip companies, only 30 of them in there. That's the cream de la cream in the, you know what I'm saying, the old Wall Street guys' mind. You know what I'm saying? So that's what the word on the street is. They may be doing it just to get into the Dow. I could care less why they doing it, cause I trade the SPY anyway. So if they drop down and I feel like they worth it, I might buy some Google shares to put in my kids' portfolio.
All right, Taiwan Jackson say, are you saying stops or stocks for liquidity?
Stops, STOP. I'm sorry, I'm from Fort Lauderdale, Florida. I talk funny. Stops, STOP, like stop loss. It's running people stop loss.
All right, that's it for questions. You got to, J Miles did say Roger that, and appreciate the info.
We all we got, Spice, and we all we need. You feel me? What's up, Trinisha? What's up, Trinisha? All right, man. My sweetie said them all the questions. I don't see no more questions popping in. I appreciate y'all for tapping in with Tim's Tidbit. Hey, was Mama in here today?
Yep.
She was. Hey, Mama, I ain't see you, baby.
She joined and she said, hey.
Ah,
And
Pumpkin, I'm
she
sorry,
did put
baby.
the disclaimer.
Oh, she did?
Yep.
Oh, I'm sorry, baby. I ain't even see you.
She at the very top.
Yeah, she right there. You know why? Cause it's her name. I was looking for Miss E. I ain't. I said,
That's
hey,
it.
baby, I see you.
Okay.
Hey.
Okay.
Yeah, man.
You got a couple great jobs. Hey, Tim. 954 LOL. I guess J Miles from Florida.
Oh, J Miles. Oh, you from Florida? Okay, then. You welcome, Tranisha. Yeah, I was born and raised in Lauderdale, man. I ain't in Lauderdale no more. I'm in Columbus, Georgia, but I guess I talk funny. I appreciate y'all, man. I'm just a dude from Fort Lauderdale, Florida. I learned something. You know what I'm saying? God blessed me with a beautiful wife who believed in me more than I believed in myself. And I knuckled down, got serious about it, and man, I ain't looked back since. And so since he blessed me, I'm just trying to bless others. I don't charge for this. I'll never charge for this. If y'all want these slides, click on the link in the description. Go download them. You ain't got to give me nothing. You ain't got to give me no email address, nothing. Y'all pull up every Sunday at 3 o'clock. We going to be doing this. If y'all got questions that I can answer throughout the day, I'll be doing like lunchtime lessons on quick little things. You know what I'm saying? Like if I get into a trade that day, I'll just jump on and do a lunchtime lesson about why I took that trade. But if you got a question you want me to Lickadale, that's right. I know you from down there. If you said Lickadale, if you ain't from down there, you ain't gonna say that. You feel me? um Yeah, man. That's it, man.
It's a couple of things on Instagram too that may be in your inbox asking for money. That's not you.
Oh yeah, if you see anything on Instagram in your inbox talk about I got an opportunity, I'm reaching out to y'all, that ain't me. I do not inbox nobody for no opportunity. The only time I inbox somebody is if you inbox me first with a question. I do not inbox anybody for no opportunity or ask you to send me no crypto or asking you no, that's not me. That's why I'm leaving Instagram, because all them fake pages that we've been reporting, me and y'all, they keep saying they not breaking no rules and they won't take them down. What strategy do you decide to win invest in options or stocks as you do your setups? For well, I use one setup for my options trading and my futures trading, and that's because I trade the SPY, and the SPY and the ES move tick for tick. If you go back and look at the lunchtime lessons that I did, if you go to the playlist, the lunchtime lessons, that's breaking down my exact strategy. That's the only strategy I use for my futures trading and my options trading, and it's all fractal. So if I'm looking for, just like if you look on my chart right here, this is a daily chart for the SPY. Let me switch back over. Let me get this junk off the screen so you can see. Right? This is a daily chart for the SPY, right? This is a daily chart for the SPY. And if you notice this box right here, that's because this is my setup that I use on the 2-minute time frame, right? But these are daily candles. We came down, we went into the liquidity right here. We formed the swing high right here. We formed the swing low right here. We broke that swing high with authority right here. And the very next candle, we made a fair value gap. Now we traded back down into the fair value gap. Now I'm waiting for my confirmation. Are we going to keep going down or are we going to go up? Once I get that confirmation, this is where I'm placing my swing. Once I get the confirmation, this is my exact setup that I use on trading futures on the 2-minute time frame. You see what I'm saying? It's all fractal. It's all fractal. Just except for waiting 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Instead of waiting 20 minutes, I've waited 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days. And I still ain't got the confirmation. But it's the same setup. Oh, you say send voice? Oh, yeah, that's what that's what Jay said. Jay said, oh, he gonna start sending voice notes. All right. I think that's it, y'all. We gonna wrap it up for the day, cause we on there for 55 minutes. We on there for 50. I appreciate y'all for spending time with me. I appreciate everybody that been praying for me. The Omicron didn't stop the show. I feel 90% better. Wednesday, Thursday night was the rough night.
That's why I'm outside.
Say what?
That's why I'm outside.
Oh yeah, that's why I'm a sweet outside, cause I ain't got my mask on right now. But yeah, Thursday night was the rough night, and I'm back to like 90% now. But the Omicron ain't gonna stop no show. We gonna get this information out there, baby. All right, man. Y'all know what it is. I'm Tim Rod. This has been Tim's Tidbit. Until the next time, see ya.